Hello friends, we are continuing with the banker-customer relationship, and here we shall discuss different types of deposits. Friends, broadly deposits can be categorized into two categories. One is called demand deposits and others are called term deposits. In demand deposits, current accounts, saving bank accounts, overdue fixed deposit or term deposit accounts, unclaimed deposits. So they are categorized as part of demand deposits. The basic feature of these accounts is that these are payable on demand. Means customer can withdraw this money anytime by simply demanding the money. And here the banks pay either no interest or rate of interest is quite low. For example, in case of a current account, no interest is paid. For saving bank accounts, the rate of interest as compared to term deposits is much lower. The second category of deposits is term deposits. Term deposits are those deposits which cannot be withdrawn on demand. So they can be withdrawn on maturity only. So they are payable on expiry of deposit period. And this deposit period, it can be at the option of the customer. So at the time of opening this account, customer has option to choose the maturity period. The minimum maturity of a term deposit is 7 days and maximum maturity is 120 months, or we can say 10 years. Friends, nomination facility is available in demand deposits also, in term deposits also. What are important features of demand deposits? The first important feature, let us see, of current accounts. Friends, who opens the current accounts? Current accounts are opened for meeting requirement of the business transactions. So those persons who are in the business, who are doing their business, they need lot of banking transactions. So this current account meets their requirement. In current account, no interest is paid by the bank. On the other hand, depending upon number of transactions, the banks recover charges from them, the service charges. As regards restrictions on depositing the money or withdrawal of money, there is no restriction on deposits of money and there is no restriction on withdrawal of money. So any number of times the money can be deposited or money can be withdrawn. But on the other hand, saving bank accounts have different features. Saving bank accounts are not opened for business transactions. These are opened for inculcating saving habits. Here, interest is fixed by the banks and it is paid on daily product basis. So interest rate of different banks differs. And as regards payment, there is a Reserve Bank of India guideline that payment of interest will be calculated on daily product basis. As regards withdrawals, there are restrictions imposed by banks on a number of withdrawals. But as regards deposits, so no restriction is imposed on number of times amount can be deposited in the account. Banks also fix a minimum balance condition so as to cover their cost. And if that minimum balance is not maintained, the banks can levy charges for non-compliance. But whenever banks have to levy these charges, recover these charges for non-maintenance of minimum balance, then banks will give 1 month notice to the customer to make up the balance. After demand deposits, let us now see the features of term deposits. The first feature of a term deposit is that whenever interest is above rupees 10,000 in a financial year, the banks are supposed to deduct tax at source. This rate of TDS is 10% of interest paid. Now here, this amount of rupees 10,000 includes not only fixed deposit but also recurring deposit. If customer does not provide permanent account number details, then rate of TDS shall be 20%. Cash payment of fixed deposits. Friends, banks can make cash payment of fixed deposit also, but there is a restriction on the amount, and amount should be below rupees 20,000. This means whenever amount is rupees 20,000 and above, the repayment of fixed deposit cannot be made in cash. If it is made in cash, then there are provisions for penalty to be imposed by Income Tax Department. Friends, term deposits are not transferable. So these accounts do not have this facility of transferability. As I said earlier, the minimum period for term deposits is 7 days and maximum period is 10 years. Interest is compounded on a quarterly basis, but at the option of the customer, the payment can be made to customer on a monthly basis, it can be made on a quarterly basis or half yearly basis or yearly basis. Not only this, this can be included in maturity proceeds also. If a term deposit falls due on a holiday, say a Sunday, then it is payable on a next day, and in that case the interest will be paid for that holiday period also. For example, if deposit falls due on Sunday, it will be paid on Monday if Monday is a working day, and interest will be paid till Sunday. Deposit above rupees 15,000, they can be offered without premature payment feature. So these can be offered with premature payment feature also and without premature payment feature also. Friends, banks can offer deposit scheme with hybrid features. So in case of hybrid features, there is a combination of saving bank products and term deposit products. Balance above a predetermined level can be transferred to term deposit from current or saving bank account in such cases. Friends, differential rate of interest can be paid when amount of single deposit is above rupees 1 crore or when deposit receipt is issued without premature payment facility. And here we have already noted that deposit above rupees 15 lakh can be offered with premature payment feature or without premature payment feature, and a differential rate of interest can be offered in these two situations: when the single deposit amount is above rupees 1 crore or deposit is issued without premature payment facility. Now, deposit accounts of non-resident customers. Friends, non-resident customers can open different type of deposit accounts. One of such common deposit accounts is a non-resident account, non-resident ordinary account. Non-resident ordinary account is a rupee denominated account. This account can be opened as a current account. This account can be opened as saving bank account, recurring deposit account, FD account. The period of this deposit is at discretion of the bank, means minimum 7 days and maximum 10 years. This deposit can be in single name or it can be in a joint name also. When it is in joint names with a resident relative, then it is only former survivor account. As regards rate of interest, it is discretion of the bank concerned. Another type of rupee account in non-resident accounts is non-resident external account. So this account can also be current account, saving bank account, RD or FD account. If it is RD or FD, then minimum maturity period is 1 year and maximum maturity period that can be decided by the bank. Rate of interest again is at bank discretion. But in both these accounts, the rate of interest cannot be more than the rate of interest which banks offer on domestic deposits. So this account can also be joint farmer survivor account with the resident relative. And here loan against FD is permitted up to full value of FD with appropriate margin. Another type of account which can be opened as a non-resident account is FCNRB account, non-resident foreign currency non-resident bank account. This account can be opened only as a fixed deposit, not recurring deposit, and the period of this deposit minimum is 1 year and maximum it is 5 years. Rate of interest on such a deposit is fixed as a ceiling rate by Reserve Bank of India, and that ceiling is linked to LIBOR, London Interbank Offer Rate. So this account can also be opened as a joint farmer survivor account with close resident relative. In this case also, loan against FD can be given up to full value of FD minus appropriate margin. Friends, if a person becomes a resident in case of FCNR or NRE or NRO account, what to be done? So when a person becomes a resident again from non-resident to resident, then NRE account balance can be transferred to RFCD account, resident foreign currency account, immediately. But as regards FCNR balance, it will be transferred to this account when the fixed deposit receipt matures. Well friends, as regards anti-money laundering, that we shall discuss in next part of this lecture. Thank you friends.